All right, good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Basically, what we got going on today is Bitcoin acted like it was going to catch a little bit of a support off of your 3-day demand zone. I posted that yesterday on Twitter to watch it. It did go down and make fresh bear market, or not bear market lows, but fresh daily lows yesterday. Got back above daily support, and it did look like it was going to act like it wanted to get support and go. The problem that you're seeing here is you are in a bearish market. All right. The bear market is always when you're in a bear market, you got to always give support to that, right? The credence goes to it, and you're bearish on the week. Last week you closed bearish. All right. This week you're trading as an inside week. So it is a small range week. Today's Thursday. So your week is almost over. What is the likelihood that you're going to push up and close above weekly resistance if you're bearish on Thursday? That means, we pretty much already got a weekly high here. And is this going to be the weekly low? Who knows? But what we do know, if you've been following this channel for any length of time, is, weekly open, good spot to look for short entries. I told people in the Discord that people will be shorting here, and it does look like they are trying to do so. So right over here on the hourly time frame, you can see that you do have a demand zone or supply zone right here. So to be honest, if it's going to continue to be bullish, you'll get a close above whatever the close of this candle is right there. So it doesn't give me the price. So we'll just call it roughly 19,211. You get an hourly close above that, then you're probably going to make a fresh daily high. If you cannot close above the bottom or the open of that candle, and if that instead comes in as resistance, you will likely see price roll over. Sorry about getting the late start. I was trying to get everything situated. And yeah, so here we are. So what we're going to do is we're going to watch this area for potential short entries. Am I going to throw my stop all the way above the high of day? Absolutely not. If this is going to roll over here, then my stop is just going to go above this candle's high, and we'll see what happens. I'm not going to throw the short. I'm not going to just throw a short limit order here. I want to see if price can even get there first. If price can't get there, then I'll just market order in, and we'll see what happens. Daily support is here at 19,058. That is going to be your short side target. On the hourly time frame, it looks like this right here. The reason why I'm not just going to go ahead and take the short here is because the point of control for volume is setting under this right here. So you kind of have a potential demand zone right here. We have a 3-day demand zone there, and that 3-day demand zone is going to be closing tomorrow, or the 3-day candle. So with what I see on the weekly time frame, with what I see on everything, basically you gotta look for short entries. If you want to be a bull, you can look for 3-day demand. That is $19,153. If that price holds on a close of tomorrow, then maybe, into the weekend or next Monday, you can wait for a retest of that area. So today needs to close above this line. Today does. All right. Needs to close above this line here. If it does, then you'll let it go wherever it wants to go. Look for a pullback into this area to get long. I don't have a long bias. I have a short bias. I have a sell bias, and I will have a sell bias as long as we're red on the month, red on the quarter, red on the week. We're just barely green on the day. All right, so let's go over here and see. Yeah, you're just barely green on the day. See that? 0.23% on the day. So that means your daily open is going to be right around here. This right there, that's your daily open. So that's what you're bouncing from. You can see how the weekly open acted as resistance. It traded just above that. That's where the sellers were setting today. You got a nice reaction. That is a fantastic sell side reaction. So what do? We wait for supply. This is going to be supply. Wait for supply to be tested. Then you get short. You target daily support. That's this level here. All right. It's that simple. That's the trade. If it doesn't work, it doesn't work. But that's the trade for today. It's a short, and you're looking for 19,058. Now, all we got to do is just let it play out. But this, you see this big sell candle on this? This took an hour to do. You traded right down to what? The daily open. And that's why you got this bounce. This does not mean it's being bought at the daily open. We do know that most of the volume for today's range has traded at the daily open. And the first part of the day, you traded lower. This was a liquidity run right here. So let's get rid of all the lines. Let me show you while we're waiting for the setup to take place. I'm going to go over here, put this box back on so that way you can see all the days right here. Yesterday morning, we did the Discord session live stream. And basically what we were talking about is here is the next liquidity zone or the next target for the short side right there. We took the short here on the live stream Tuesday morning. We took this short. I took it with you, remember? There's what happened after Tuesday's short that we took together live on this very channel. And price came all the way down to our liquidation target. The reason this was the target, I spoke about it yesterday when we were trading in here. I told everybody yesterday that we did take out yesterday's low, but if price can't get moving towards the upside, that this was going to be the target. And then the next liquidation zone is going to be your CPI print low, which was the low that made a fresh quarterly low, as well as you took out the third quarter low. So the fourth quarter opened, you got a range expansion to the downside, taking out the third quarter's low, and then you got a nasty bounce. That is a nasty bounce. So we were kind of bullish once that happened because, well, you know, people will buy a fresh quarter low or a liquidation of a quarterly low. It's a big, 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 big level, right? Massive level. And you see the reaction you got. I mean, as soon as you took out the previous quarter's low, look at that bullishness. And this happened on the day. I even told people on this day that I would not be surprised to see this day closed green, and it did close green, even though we had that nasty bearish reaction. So we've been trading sideways since that. And you've been making lower highs and lower lows since that. So Tuesday morning, we shorted this. I mean, up there, the high. We shorted the high. We got short right there. We were looking at the same exact thing right there. Let me go over here and do this. For people that don't believe me or that think that I am speaking in hindsight. All right, so here is the entry. There is very little money on this. I took this on the main account as well, but I took it on the USDT side of the platform as well. So that way I could show you. I took the same exact entry here. See this right there? There's your supply. There's my short entry. There's my stop loss right there. All right. I realized $138, literally hardly any money on the account at all. This USDC, or no, I'm sorry, the Coin M futures, that's the real account. This entry is exactly the same. We took that Tuesday, and then here we currently are. All right. So this entry is right there. I told you guys I'll take this entry with you. As soon as I said that, boom, short right there. All right, so moving on over here, back over to this. That's here, right there. It's right on the close of that bullish candle. So today's short would be in here, right in the same area, right here, roughly, right? You did get a test of it, so let's see what happens from there. But it's the same scenario, same setup. It's not, you didn't take out yesterday's high. This is yesterday. This is Wednesday's range. All you did yesterday was took out Tuesday's low and you traded sideways on the open of today's candle is when you pushed down and took out that liquidity range to the downside. So this could be a legitimate push, and it could be buyers could step up here. Let's go over here to Twitter real quick. Let me pull this up over here. Right here. For all you Bitcoin bulls out there, price is at a place of potential long entry if you are at daily and 3-day demand. Naturally, I don't know if it'll hold or not, but if I had a bullish bias, I would see if this level holds. So you got two areas of support right here. This is the 3-day time frame. Now, if we go over here to the 3-day time frame, you're going to see that this is the level right there. That is your 3-day supply zone. This candle closes tomorrow. This is 1 day and 11 hours, not tonight, not 8 p.m. tonight, but 8 p.m. tomorrow night. This will close. If you're below 19153, then you can look for more downside. If you're above it, then you can look for a retest of it for a potential long. The weekly looks disgusting. For, 5 weeks now, we've been trading in this range here. Right? This was the range. That took it out. So this is your range from 18,153 to 20,479. That's not very big. That's a $3,000 range for Bitcoin. That's not a big range. 5 weeks. Haven't went anywhere. And the same scenario goes on the monthly as well. If you pull up the monthly time frame, you're going to see here, since you put in the lows 4 months, you've literally almost went nowhere. Here is the current month of October. There's September. September closed breaking down below monthly support, which is there. There is your close under. I basically said as long as we're under this line, I will be looking for short entries. I will be selling swing highs. Selling swing highs as long as we're under that. And so far, we've basically been selling the swing highs. Selling the swing highs. This was our entry Tuesday. Right there. Tuesday, October the 18th. Entry. That's a swing high. So that's the way you got to set your mind if you're looking to be a day trader or even a swing trader. In a downtrend, you're looking to sell this, sell this, sell this, sell this. It gets worse the lower price gets naturally because you can see that it is trying to hold support down here. But, the ATR is getting smaller. Where is the ATR? It's not here. Anyways, the ATR is getting smaller. That just means that the ranges in price are getting more and more and more and more compressed. We can look at the ATR and do that. We can also look at this indicator over here and see that. Let me get it on the daily here. Let's just make this big. Refresh. Pull this up. So here, this is volatility. ATR is another name for volatility, average true range. So if your average true range is going down, that means your ranges, the size of the ranges are getting smaller and smaller. That means volatility is compressing. Momentum is just not doing anything. All right. There's stochastics, relative strength indexes, MACDs, all that stuff. That measures momentum. This measures volatility. Bollinger Bands, this thing, ATR, all of that is a measurement of volatility. So when you have low volatility, it makes it very difficult for trading to work is good simply because the ranges are smaller and choppier. So since you broke down, this was the last support that needed to be broken right here. No matter what trend line you put on this thing, it's price is low going lower, right? It's not making higher highs and higher lows. It's making lower highs and lower lows. When it was over here, it was doing the opposite. It was making higher highs and higher lows, but with the caveat that we know that more than likely this would be a bear market bounce or a dead cat bounce. So when we put in this low, we did take longs. We got long for the July low. We had a target of this wick right here. And then inside of each one of these daily ranges, we've been trying to nail day trades. But naturally, overall, you can see here as price was moving up, we had a bullish target of this wick low. This was the July high or the August high, apologies. And then August high, once the August high was set, you got a nasty reaction, and we've been short ever since. We've been selling the swing highs. So when we're bullish, we're buying lows, you know what I mean, and selling highs. That's how you operate inside the market. Volatility is narrow. What that means is if you get a bullish breakout, something like this, when volatility is on the lows, then you could have a volatility expansion, which just means it goes up. When this indicator is moving up or down, it does not mean price is moving up or down. It means volatility is. Volatility can move to the upside as price is going down. That's not what you want. So if price breaks down, which we did last month, and volatility starts to expand as price is breaking down, then you can look for a big move lower. If price is on the lows and starts to break out and volatility starts to expand, then you can look for a big move higher. Does that make sense? But I mean, it doesn't really matter. Indicators are going to follow price. Those indicators, they will print their numbers on the daily close, on the daily closure. So indicators only follow price. You can see what price is doing just by looking at it. It's essentially not doing anything. So right now it is back to being green on the day. You are testing the level that I wanted to see here on the hourly. So if you think it's going to go lower today, this is where you would take your short entry right here. I don't know that it's going to go lower today. Remember, the point of control is setting at the open of the day. The open of the day is here. All right. This is your weekly level. It's not going to be exact. I'm just going to get it close. That's roughly around where your weekly open is. So this should be your entry. Where should you put your stop? I think you should put it at least above this wick high. So if I mark an order in right now with what I got going on here, just sell short. All right, hang on. All right, sell short. That means the limit stop or market order stop would be 19,229. So entry roughly around in there. Stop roughly right there. And then daily support would be your target. Right there. I had it on this daily support a while ago, but I don't know if you'll get down there because you have this daily support now. So that's what your trade would look like. You can't go long. You know what I mean? If you want to go long, then you have to go long down here or down here, right? So this is the sell side entry. You could put your stop above the high of day if you want, right? It's up to you where you put your stop. We got 9 minutes left on this close. A close above supply or above resistance means the trade is no bueno. All right. So a resistance entry is even better. This is resistance. It's the highest close. That's when you got your bearish reaction. If price is going to continue down on an oscillating movement, something like this, it should go no higher than that. It shouldn't. But you can see here, buyers are trying to buy it because of your 3-day demand zone. So it's one of those things. It's up to you, but that's the analysis. I can't tell you where price is going to go. I don't know. But with price what price has been doing is it has been going lower. Has been going lower. But 3-day demand is an area where people will be a buyer. That's where people will look to be a buyer. I don't know why they would look to be a buyer. I guess they're being a buyer off of this. expecting a breakout. This little leg of price setting in a high, but you made a lower high here, bro. So, I mean, it's choppy, range bound, difficult trading. It's not trending. This is not a trend. All right, on the hourly, you're back above. So, yeah. Volume point of control is down here. I would much rather see the point of control up here if I was looking for short entries. Yesterday's point of control, not quite at the high of day either, but it was earlier in the day. So, yeah, it's difficult. Up here, point of control, when we took the short here, was below us as well. But you're getting lower and lower towards the range. This is going to be weekly low to weekly high. If I fib that, you're going to see that I fibbed it to the downside the other day because this weekly range did close bearish. You can see here, you got a 50% retracement from this swing low to this swing high. But that happened last week. Last week. This week, you traded down below the 50% retracement of this week. So this week closed bearish, so I was fibbing it this way. So if you fib it that way, you can see that you did close above it and rolled back over. Today you're coming in, tagging the 618 retracement. That's the daily high right there. Here we go. Let's see how we close. We got 6 minutes on the closure. Welcome, everybody. All right, let's see here. Yahoo, yoo-hoo, yep, good morning, good morning. I put in 15 minutes. I'm going to need you to get up and let out, big boy. I don't know what that means. Very small, good morning, yo, what's up? Yeah, Tesla, please, Heath. Let's wait and see how this candle closes, and then we'll move on to checking other assets. Because if this is going to be a short setup, it's going to happen now. It's getting really late in the day. I don't like taking new entries after 9, but we'll see what happens here. What we are expecting is we are expecting this hourly resistance right here to hold. And we're expecting the weekly candle to close red. That's what we want to see for our trade setup. Other people who are getting long based off a 3-day demand are going to be wanting to see this thing go higher. And then this is your weekly open. So yeah, this is the weekly low, the current weekly low. So basically what I see here is you got this week's open was where? But anyways, I mean, there's your expansion. You set in a weekly low, you're coming back up. You tagged the weekly open and got a bearish reaction. So if this was, but I mean, you've tagged the weekly open several times. We were trading around the weekly open yesterday as well. We were trading around the weekly open yesterday as well. So I don't really like for a level to be tested multiple times because eventually it'll break. So if price can't break down and at least go set a new weekly low before Sunday, because this is the spot market closes on Sunday, then what it would look like is an expansion, pullback, expansion, lower. But the one thing that's got everybody screwed here is going to be that big news event, that CPI news event. That's what threw everything off balance. Not really, though. I mean, if you look at this on the hourly, this just looks disgusting, right? ever since you set the August high and you got nice expansion lower. This was the previous month's CPI. And you've just been trading absolutely sideways and disgusting. We, as traders, we generally want to be trading in trends because trend trading it makes a lot of money. When you're able to catch these trends and just let your entries ride as price continues further and further away from your entry, it just makes for much easier trading. That's why in a bull market, typically that's when you'll see an explosion of growth on the side of entertainers and Twitter people and YouTubers become professionals in bull markets and they get a huge following. It's because there's a lot of interest in the market. When the market's trading sideways, there's zero interest. But we're still here every single day trading. But this will close tomorrow. And then let's look at the dollar here. So the dollar's naturally in an uptrend. It is finding a little bit of resistance here for the last several days. This is going to be weekly resistance. Let me go back over here. All right, so this is what we have on the dollar today. Yesterday was nice and bullish, right? We traded lower, found support, got a nice big bounce yesterday. Today, weekly resistance. Naturally, you get a little pullback. There's an old daily support here. I still counted it because it held here. Bing, right there. And then this day broke out. So I'm looking at this to be support. We trade down into it ahead of Q4's open. So if the dollar's trading under this white line, then it's red on the quarter. So anything under 112, 173, you're red on the quarter. Q4, this is the last quarter of the year. So sometimes you can see reversals happen here through Q4. And then, a lot of times the reversals will come at the beginning of the year for the first, the yearly opening range. All right, look at the date down on the bottom of my screen. October, November, December, boom, right here's January. January 01. So what marked the low? January the 6th is 2022's low. January the 6th marked the low of the year. Right? You came close to getting back to it here, but you didn't. And that happened around June. I mean, that's 2021. Sorry. I was not this year. Naturally, this year's yearly opening range is in here somewhere. Right in here. But, this was the yearly low. Boom. For January. Then you just get the expansion. And it happens all through 2021. It's an uptrend. And then 2022 happens. Right in here's your yearly opening range for it. Right here. Yep, that's your yearly open right there. Right there, yearly open. So that's when the year opens, January 1st. Trade down a little bit, trade up, down, 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 and just straight up. So all 2022 has been straight up. 2021 was pretty much up too, but not straight up. It was more sideways to up. 2022 takes off to the upside. So does 2023 top out and roll back over? We'll see. Will it be a sideways to down year or what? But right now, as of right now, it's bullish, and it's still bullish. If this is going to be a lower high, then what you need to do is you need to take out the quarterly open and get back under this swing low. Then you will have a lower high, lower low, and then you could say potentially you could start looking for bullish entries on risk and Bitcoin. but the trend has been up. So the trend on Bitcoin has been down. So you look to sell. But you can see that Bitcoin, even though the dollar is just up, Bitcoin hasn't really been doing anything since June. Just been in a big range and little ranges. The last several weeks has been very tiny ranges. It's boring trading, but it is still tradable. We navigate these markets every day. Every single day. We're killing it. You ever look at the inverted charts? Not really curation, because I don't see any reason to look at it. It just it inverts my bias. I mean, I see people do it on Twitter all the time. You know, the Uber bulls. That's the only time they're bearish, when they use an inverted chart. But I mean, it doesn't help my analysis at all, because I'm a price action analyst, right? I analyze price. I try to take what price has given me, you know, the data that it has already given me. I try to take that data and translate it to what I think is going to happen in the future. Today looks like a bullish day, but the buy would have been lower, right? You can't buy the high of day at 10 o'clock in the morning. You just can't. Is it possible that it makes a fresh daily high and then a fresh daily high again and a fresh day? Yeah, it is. But when it comes around 10 o'clock in the morning, you should either be in your position or you should have taken it much earlier. In this scenario, the London session did not set the lower high of day today. Right here's the London session. That's your 2 o'clock. No, right here. 2 o'clock candle. So London session is the middle range. The low of day was set during the Asian session, during the open. Bitcoin's daily open happened here. You got a nasty move lower. Yeah, there's no way I would have bought that. There's no data in the world that would have told me to buy that down there. Could you have bought it after you got back above this swing low, though? Yeah, because that was the liquidity. That's where the liquidity pool was setting. We knew that's where the liquidity pool was setting. So if it was going to be a liquidation break trade, you would have waited for price to get back above this line and you would have bought it, put the stop there. Right? We just don't know if it's going to be a liquidation break. It happens quite often, but it doesn't always happen. So here was a liquidation. You could have taken a short, but it wouldn't have amounted to much unless you held it. But this was the London session. So, I mean, I've woken up before at 3 o'clock in the morning and then just wherever price is, take the opposite trade from that point and made money many times. If I'm trading at around the high of day at the London session, just get short. Just because I know a lot of times the London session will cause the high or low of day. So Bitcoin did close back under the level we wanted to, but this doesn't really look like it's trying to get bearish, does it? Doesn't look uber bullish on the 5-minute, but nevertheless. And there's not an inefficiency there. So, I mean, it should roll over from here if it's going to go lower. If it doesn't, then it just means the directional bias is wrong. But that's the level right there. Like, that's the only reason to take the short, is because of that reaction to that level. You still didn't take out support, though, which would have been a lot better if this candle would have closed like down here, taking out this support. That would have been much better. But we'll see what happens. Let's see if volume is even coming in. Is volume picking up here? It is. Is it picking up enough? No. I mean, it looks like a buy, don't it? But this thing is up above the midpoint of the day. If it is, I mean, if there is a lot of shorts building up right here, if price makes a fresh daily high, it will stop out all these shorts, and then your daily range will expand. I could see the daily high being as high as 19,450 if that happens, because this is the weekly open and today is Thursday. If this thing is going to close bearish on the week, this is where it needs to roll over. But remember what I said earlier in the stream. It has already been tested twice since the breakdown, since you broke down. Once you stopped being bullish on the week and you started being bearish on the week, you were bullish here on the week for, what is that, 20 minutes? Right? So as soon as you get back above that line, you're bullish on the week. You were bullish on the week for 20 minutes here. You're bullish on the week for 15 minutes here. And then you rolled over. Now that you're right back there again, it's not the most tantalizing short position I've ever seen. I'll tell you that. I think like seeing this stuff here now, I think being a buyer of 3-day support will be the trade to take, or 3-day demand. As long as tomorrow closes above that. And that's where you are. So we pull this back up and you can see how close the demand is, or I'm done with it, man. See how close the point of control is to the demand zone? That's why the point of control is because of that level, right? It's because of that level. That's why. That's why you got so much volume right here. That level. Now you're back above resistance again. Doesn't look great. Let's see what happens. Upon taking out the high of this candle, my trade will be stopped out. The stop is 19,227 on the Bitget exchange. And there it goes. So I was just stopped out. It may roll over now. It's just I can't. When I take, like if I'm taking this down here, I can't justify a stop being that high, right? Because I'm trying to get my risk to reward within daily support. It's just not a short trade today. You have a lot of bullish momentum. There's no way you will know that when you take the trade. It's impossible to know what it's going to do. Let's go back over here to the hourly real quick and we'll line this up. So that would be entry. This would have been the stop, right? Now see what happens when I go down here to daily support. You see that? It's a 2-to-1 risk to reward. By bringing my stop up here, it's now the risk to reward is skewed. So you can see now in real time what has happened. This would have been a good spot to be a buyer. Why? Because it's daily freaking support. It's where yesterday closed. Right? That's where you want to be a buyer. I wouldn't have taken this long today because I have a short-sided bias. I wouldn't even be surprised if you take out this swing high and then roll back over, but I'm not going to do that. I've already lost the trade this morning, so now I'm done. The short trade is still on and, going good though. I will drop because I will drop it. I don't want to lose all of this unrealized P&L. I took profits on this push. Like once we got into profit target range, I took profits, moved my stop. I just moved it back up just to show you what it looked like. But I will probably pull the stop down to here at least. That's still going to lose a lot of this unrealized P&L, but it doesn't matter. The trade already made money. And I won't lose all of the unrealized P&L. Just probably over, it'd be more like 3/5 of it, right? 3/5 of the trade will be unrealized profit will be lost. Because if that 3-day demand holds, then Bitcoin can absolutely get a bullish rip. Choppy stuff is difficult to trade. You have to really know what you're doing to be successful in this game during these kind of market conditions, which is why you guys are here. All right. So let me go look at Tesla now that trade didn't work out. All right, TSLA. Why did I type in TSLA and it pulled up Bitcoin? Maybe I put AL instead. Yeah, we were looking at Tesla last week. It dropped well below the level that we were watching. Yeah, I mean, it took out weekly support too last week. It's, like I said, that news of the Twitter deal going through, that's what put a hurting on Tesla. I wouldn't be surprised if it started to bounce now. You got a ways to go before you get to the 200 exponential. 200 simple's way under. Let's see what it looks like on the daily. Yeah, I mean, on the daily, it looks like the bear market's just getting started on Tesla. Right there was your death cross. So all of this was just a trap. It's bearish. I mean, I wouldn't be looking to buy it until the markets turn bullish again, at least. You could probably start being a buyer now, though. We were discussing this yesterday because inflation is trending lower. We're not getting the inflation to trend as low as we want it to, but you do have 3 lower prints. What was it on this day? Yeah. So, I mean, it's not going down as fast as we want it to, but I don't care. That's lower. Lower, lower, lower. So here was your highest. 1, 2, 3. That's a trend. That is a trend. I said back in June, if we could get a trend of inflation going lower, the markets would more than likely pick up. It's just the problem is it's not going low enough. And then on the other hand, this number is going up. So it's a mixed signal. We would like to see this number trending lower with the other. I guess. It's hard to tell what the market wants. We definitely want to see this number trending lower, and it is trending lower. What is next month's? Did they give us? No, I'd have to go look at it on next month's. What it's looking for, lower or higher, but yeah, so I mean, could you be a buyer on Tesla right now? Yeah, because you just took out this low right there, and that was the lowest low since June 21st. Right? So you just made what? Fresh 4-month lows? Yeah, you could be a buyer. You don't want to be a seller at fresh 4-month lows because price oscillates. It doesn't go in a straight line. So now that you've had a nice leg of price to the downside, you're going to get some choppiness maybe here. Could it keep going straight down? Yeah, but is that the likely scenario? Probably not. S&P 500 made fresh bear market lows. But this is another thing you guys need to understand is price takes freaking time. It takes a lot of time to play out. Let me show you this point here, and then I'll answer some more questions. We're going to drop to the weekly time frame for this, all right? Bear market low was there on the weekly time frame. These 5 days to do this. One candle, 5 days. New bear market low, bounce. Go to the year that everybody keeps referring to. I see fractal after fractal after fractal on Twitter. This is the same thing we're doing, though. I mean, like it or not, there's your bear market low in 2008. Also, that was your 20% area. It's exactly the same. From swing high to swing low is what? 20%? That's a bear market in the S&P 500 terms. Swing high to swing low, 24%. All right, now that we've gotten that fact established, that is a fact, and it is established. This week here, you made fresh bear market lows. See that? On that week, that was a breakdown, a close below. How many weeks did it take to then? Well, the very next week you took out the low. But then that's when you got bullish. So once you took out this week, 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks. And finally, on the 9th week, 9 weeks after making a fresh bear market low, you made another one. And then after that happened, right? So I said all that to say this. Just because you made fresh bear market lows here does not mean you're going to see new bear market lows or that this thing is going to break down like a trap door just opened and price goes. It's not going to happen. Everything's different now than it was in 2008. The Fed, 2008 in March, that's when the Fed started TARP. The Fed controls the market. They're trying to stop controlling the market, but we'll see how far that goes. Price action takes a long time to play out. It could be several weeks from now. It could be November, even into December before you take out this low. If you take out this low. All right, so this was the week that stopped out everybody. So this would have been the liquidation trade, and naturally, it closed on the lows. Why do you think it did that? Why did it close on the lows and not break down? Look at this next week. Massive bullish spike. Then you took it out. That's liquidations. Liquidation, now price, maybe it wants to move on up to liquidate this, since you just liquidated this. So, that's all we do, right? Since price is closer to this liquidation, this last week liquidated this low. So now your liquidation is here. All right? So maybe since price is trading up here, this is the liquidation it's looking for. Maybe wait for that high to take out. Maybe wait for price to get back under 38.06, then start looking for shorts. Bitcoin's popping. I'll do the same thing that I just did on the S&P 500 here. So what did I say? I wouldn't be surprised to see it get up in the 19,400s area today. Once it gets over the high of day. You got a nice spike. Today ain't over either. So I was on the wrong side of the trade this morning. And it happens. That's why we risk the same amount on every trade. Because we win more than we lose. But closing up in here will be good moving forward. We'll be watching 3-day demand. That'll be pretty close to where I'll be looking for bullish entries, depending on how this closes. Like I said, tomorrow night is the close. So anything above this tomorrow, I will be looking for a retest of this for long entries. Will I be targeting this all the way up here? No. But it's possible. That's the liquidation. So what I just did on the S&P 500, this liquidated a lot of days. So now, here's your liquidations. You got to get under there to liquidate because this liquidated everything over here, right? So now the new liquidity is setting there and here. If it gets above this and it wants to continue, your next liquidation point or target would be that. You're now bullish on the week. You got weekly resistance there, though. I wouldn't try to short it there either. Closing green on the week is going to be a good sign for Bitcoin moving forward. Uh-oh, wait a minute. Someone's alerting me. Let me make sure they're not saying something like, all right. All right, let's answer some questions. Does anybody know when the Bitcoin short take profit is? Yeah, it didn't happen. We got stopped out. Unfortunately. If you're creating, oh wait, second. Let me go up. I read Pepe the Cat's. Oh, hang on, let me tell my girl that. It's awesome. I love you all. Pepe the Cat, about 15 minutes, I'm going to need you to get up and... Okay, I see what you're saying. All right, I got you. I didn't understand at first because I was reading too quickly. Now I got you. Thank you. All right. Good morning, traders. Good morning, Cassidy. Heath, you're going to take a long if Bitcoin closes. Yeah, above 3-day demand. And that closure is going to be tomorrow. And we'll go from there. 3-day closes tomorrow. The Sunday will be the weekly close, but tomorrow, Friday, will be the close on this. We do know that, this isn't as important to me as spot price because this thing gaps. Sometimes this thing closes and then, Bitcoin opens when this opens higher or lower because the spot chart is where this thing gets its data from. So I just pay attention to spot. I don't care about the CME. If you just pay attention to the spot, you don't have to worry about gaps. But yeah, if this week closes up, it would be nice to get a close above weekly resistance. But I mean, if that happens, then yeah, we have no other reason to look for shorts for now. We'll be targeting this swing high. First, we'll target this, then this, right? If price, with this liquidation run down here and this bullish reaction, we'll see, how does this close this week? If it closes up, then we can assume that the liquidations are looking higher. Open interest is building. Here's your open interest. Well, it was just there, and then it did this. I don't know why it's doing this, but your open interest is building. There we go. See how it's building? So, I mean, it's just difficult, man. It's hard to get a directional bias when this is going on. This has been 5 weeks of this. This week we liquidated that high. Then this week we liquidated that high. This week we liquidated all of the lows. You see that? And now we're just kind of stuck here in the middle of the range. That's why I'm saying if this thing closes above 3-day demand, I will have a target. Naturally, first I'll be targeting this week's high, then I'll target next week's high, and yada yada, if price continues to move up. Like, that's how price action traders, like when I got a target, it's generally based off of price. It's not a random target I just think up. You know what I mean? Since I'm a day trader, I'm trading inside of the daily ranges, but I'm also mainly trying to get that best trade for the weekly range as well. So taking a short at the weekly open, especially if the candle's red or bearish, because my bearish candles are blue, but if you're bearish on the week, Taking a short at the weekly open is never a bad trade. Never a bad trade. Look at the short that took place at this weekly open. Look at the short that took place at this weekly open. Look at the short that took place. You get the drift, right? So taking a short there when last week closed bearish, not a bad trade, but price just didn't work. This is why I tell you risk management is the most important aspect of trading. That is a fantastic trade. The weekly open test on a bearish week, hell yeah, you short that. In a bearish market, yeah, you short it. Will it always work? No. Nothing works in trading all the time. That's why risk management is so important. But yeah, if we close bullish, we'll be looking for longs, Danny. I still have a short overall bias as long as we are trading. Hold on, I just caught something. I can't see the numbers on your chart. These numbers? Huh? Oh. I'll make these bigger, I guess. I made them bigger once before already. I guess I'll make them bigger. I don't know how to do that right off the bat. Let me just go into settings real quick and then I'll make the scale larger. I don't know how to do it. I'll figure it out later. Somebody will tell me later. All right. You're creating competition. You're creating competition with Jordan. He's going to cry. Have mercy, my friend. I'm not competing with Jordan or any other YouTuber. My channel is tiny in comparison. He has over 150,000 subscribers. Dude, I got 7. You know what I mean? 7. That isn't competition. No. When I have 150,000 subscribers and I'm pulling in 2,000 to 4,000 live viewers every day, then I'll be competing. I'm not competing yet. That's not competition at all. He has no trouble. His live streams generate a lot more viewers than mine. All right, Pepe the cat's getting mad. Pepe's mommy's home today, so she's taking care of you, buddy. Does anybody know where the Bitcoin short take profit is? We already did that. If you could, how would you trade London Open? Yeah, that's how I tell you guys to do it. I mean, it's going to be the same. The strategy works no matter which time of day you're trading. You're trying to find your bigger levels, right? Your dailies and weeklies. If you're going to be a day trader, you need to know where the weekly range is headed. So like, just forget about all of this. Forget about everything. Start with this candle right here. This candle. Boom. Why? Because that's your weekly open. Okay? So another reason why I took the short for today. Why? Well, when the weekly candle opened, it had a bullish impulse. It set in a high of the week. Then the very next day, you traded up, thus liquidating the high of the week and making a fresh high of the week and closing bearish on the day. Then the next day opened. What I was looking for on this day would have been a retest of daily resistance. At that point, I would have shorted, expecting the weekly open to get pushed below, because the first part of the week moved up. The first part of the week is the same as the first part of the day, as the same as the first part of the month and the first part of the quarter. The first part of the candle is usually the fake out move, right? So at the beginning of the week, I'm waiting and watching, and I'm a sniper. I am waiting for the weekly range to reveal itself to me. Once we had this, the weekly range had revealed itself to me. This was a fresh weekly low. You liquidated the previous day, which was the weekly low, and you closed right at it. So naturally, a retest of the weekly open was the point for me to get short, looking for the weekly range to continue lower, right? I hope that makes sense. I do the same thing through the daily ranges, but on a smaller time scale. All right. So if we go into the hourly time frame, here is the daily open. I mean, this is true nuggets of wisdom right here, guys, that I'm telling you. Here is the daily open, the daily range. The first part of the move was the fake out. Down. Boom, right there. So now you're trading above the open. So you went from being bearish on the day to bullish on the day. That's midnight. 1 o'clock, 2 o'clock. There is your London open. I would have gotten long more than likely there. Now, if this candle would have been making a fresh high, I would have gotten short. Because I know that the London session usually, not always, but usually, more times than it doesn't. And you can go back and back test it yourself. Just look at the 4-hour or the hourly chart. And at 2 o'clock Eastern, a.m. Eastern every day, see if that is the higher low. It's not always going to be, but it's going to be higher than 50%. It happens like 68% of the time. So with just that knowledge, knowing that the London session makes the lower high of day, you can make a profitable trading strategy off of that just by risking 1% to see if it's the higher low. If you're trading at the top of the daily range, short it. If you're trading at the low of the daily range, buy it. And over time, if you risk the same and take the same entries, it will be a profitable strategy. I'm just not awake during this time. So I am what's called a retest trader. I wait for a retest of a level to either A, short, or B, get long. So, but anyways, to get back to the point, the first move, lower. Then you're up here. You're not a high of day. You're at the high of day, but you're trading at the open of the day. Notice how here at the London session, you didn't close under the open of the day. Then the 3 o'clock candle comes. You trade back under the open of the day, but you closed above it. On this candle here, boom. What happened? You closed below the open of the day. So this would have made everybody short. This signal right here would have had people shorting right here. Or the open of the day. Let's just say that. So as soon as this candle closed under the open during London, this candle, as it pushed up into supply or resistance, they got short, and look what happened. This was a trap. Right there's your trap of the day. And then here comes this nasty looking candle, but it didn't close below that. Remember how I said I would much rather have seen it close under that, but it didn't? Yeah, that's because we see why right here. This was just to draw us in short again, to run liquidity. Nobody knows what's going to happen in the future. But what I'm teaching you is how to identify high probable areas just by waiting for these high probable areas to take your trade entries, high probable areas and high probable times, I should say. Just by waiting for high probable areas and high probable times, your trading losses will decrease by 50%. If you're taking trades at 11, 12, and 3 o'clock in the day and you're losing a lot of them, it's because you're taking them at the wrong time of the day, right? These moves happen around the opens. Not always, but often, more often than not. This was just a very trappy sort of day. I mean, that's all you can say about it. Your weekly opens here, your daily opens there. Naturally, I was looking for it to go short. I was looking for today to close bearish. But now that you've liquidated everybody, there's a pretty good chance you're going to close bullish on the day. Where it closes will tell me what my bias will be tomorrow. So tomorrow morning, when we go into the live stream for the Discord, we will be focusing on how today closed. And that will basically give us our signal for tomorrow, right? If you close above this day's open, like say you close up in here, then a retest of this level will be an opportunity for buys, right? Targeting on a longer time frame, this, because that's resistance. We work inside of the range that we already have. We don't try to anticipate a range that isn't there. Sometimes you will, but not always. If you notice, every time I take a trade, it is inside of a range that's already there. I'm not pretending like there's going to be a high up here. No. I am taking my trade inside of that and inside of this. It's a range we already have. So I look for the meat of the move inside of this range. And the same goes for any date, any trader time frame. Like I told you guys once a long time ago, if you don't have time to be a day trader, be a swing trader. That means you're looking to trade inside of this range. Here, you're looking to make money in this range. It's existent. It's already here. Don't try to pretend like you can make a profit target up here. You can't, because price hasn't even been up there yet. But inside of this, you can find 1 million trades, right? There's the trade we took Tuesday. Now, did I know it was going to come up? No, our profit target was here. You see what I'm saying? I trade inside the range. I'm a market operator. I'm operating inside of a range that price has already shown me the ability to go. That just cuts down. You're still going to be wrong. You're still going to make losing trades because we have all kinds of unforeseen circumstances. Random market violence is the term I've coined for it. When something doesn't go your way, you get stopped out, and 5 minutes later it does. That's called random market violence. It just literally wanted to stop you out. Not just you, but millions of yous, right? Wherever the most liquidity is, that's where price will move. Price is testing for supply and demand. That is why it is moving range bound. It is testing for demand above swing highs. It is testing for supply below swing lows. If it can't find supply when it pushes beyond an old low, try to understand this concept. When price is pushing down here, it's not to stop you out. Well, it is, but what it's doing is it's tapping into a ton of liquidity to see if there's more supply or demand here. Inside of this liquidity, there was more demand than supply. So it went back up. That just means that when the market traded down to this low to liquidate it, the smart market operators were buyers here, not sellers. When you liquidate a low and you start with what's called trend continuation, that means then once you liquidate the old low, there is more supply than demand there, so it continues lower. And it's going lower not because sellers are pushing it lower. Its price is going lower in search of demand. It's looking for demand. It's not going lower because sellers are pushing it lower. It's going lower looking for buyers. Because when buyers and sellers are equal, price will spend most of its time in a range. That's when you have equilibrium. So big bullish moves, that's not buyers pushing the market up there. That is the market looking for supply. because there's so much demand under it. It can't go lower. There's just too much demand. So price just goes up in search of equilibrium, in search of a price point that will stop it from going up. That's how the free market assesses value. That's what the algorithm is doing. It is in search of value. Who decides the value? Money. Money decides the value. Right now, Bitcoin is worth $19,282. That's because the market has distinguished this is where value is. Eventually, it'll test higher looking for supply, if demand outweighs it. But if there isn't, if there's only supply, price will continue lower to find demand. It's looking for liquidity. That's all it's doing. So when I'm taking these trades, I'm trying to basically get my head wrapped around what I think is happening, but there's no way that I can know what's happening. If I knew what price was going to do, I would literally be the richest man in the world. I would have more followers than Elon Musk because I would be richer than him. I would buy his companies just because it's fun. I don't know. I'm just joking, but I'm just trying to show you, like, it's not buyers and sellers pushing price around. It's price looking for buyers and sellers. It's not liquidating you because market makers are making price move. Market makers don't make price move. Market makers provide liquidity to the market. They don't move price. They're providing the liquidity so retail people can buy and sell at any given price. That's what they're doing. They're providing the bid and the ask. Have you ever seen penny stocks when there aren't market makers in penny stocks? You see how they run crazy? Have you ever heard stories of people being like, I bought 5,000 shares of it and then price dropped below my entry and I couldn't sell my 5,000 shares of this shit stock that I now own? You can put a market sell out there, but it doesn't do anything. It just sits there, and it will sit there until someone wants to buy them. And if no one ever wants to buy those shares, he will get liquidated. Once he loses all his money, they will ask for him to put more money in to cover his shares. And if he can't, he'll get liquidated. Those shares will just disappear off the market. The market discovers price. I don't even know why I went on that rant. I went back to found the... Yeah, those are good areas. Daily opens, daily closes, daily highs, or daily lows for a day trade. If I went long from 18,900, my take profit should be on the daily open or less. All right, so 18,900. Well, today... Oh, you were able to get almost like 18,908. It just depends on when you took the trade. If you took the trade here, yes, the daily open would have been a fantastic place for a take profit. Yes, absolutely. Would you have known that it was going to go higher? No, because sellers might step up there. There's a lot of people out there that trade the way that I trade. I'm usually taking positions at daily opens or daily closes or daily highs or daily lows. Those are 4 areas that I'm usually looking for entries. Depending on the time of the day and depending on other circumstances will determine the trade. But yeah, if you buy the low of day and a liquidation run or a wick below an old low, you buy that, take profits at the daily open. If the daily open is right above that low, then you'll have to look at yesterday's range. Where did yesterday close? Where's yesterday's open? And then hope it gets there. Yeah, that's it. You're looking to take entries inside of the daily range. So you should use massive points inside the daily range like, opens and highs and closes and lows to take profits or to exit that position. When you short crypto, why do you short Bitcoin and not an altcoin since they move further? Well, most cryptos have already lost 80, 90% of its value. So, to be honest, that's not true. Bitcoin has only lost 70 something percent of its value. Yes, some altcoins move more than Bitcoin, but I'm trying to accumulate Bitcoin, not altcoins. I think a lot of altcoins will be worthless in the future unless they have an actual use case or a value for other people to purchase it, right? I'm trying to own as much Bitcoin is because Bitcoin is the king of cryptos. Will it be always? I don't know. I can't see it to the future, but I know I want to own as much of it as I can. Since I've been looking at and trading Bitcoin, it has made untold fortunes. You know what I'm saying? Like untold fortunes. It has made more money than anything, really. From when it came into inception to where it is today is thousands and thousands of percents of gainage. There's a ton of money that can be made just trading Bitcoin in and out of Bitcoin alone, not even owning it, just trading it. I'm a trader. I do want to own as much Bitcoin as I can, so I trade it on an inverse swap contract. So when I make money or lose money, I am making or losing Bitcoin. It's not money. It's not cash. I'm not trading. Like, I got the USDT and the USDC side open just so I can show examples of trades. But the coin M margin, that's the one. That's my main account. That's the account that I use to make more Bitcoin. So when I make profitable trades, once I get to a shut-off point, like, I don't want to put more than $10,000 on an offshore exchange. That's just me. On my FOREX and all that stuff, stock markets, like TD Ameritrade, I put $1 million on that because my money is safe. Oanda, I put as much money in that as I want. An offshore crypto brokerage that's not licensed in the US, $10,000 is as high as I go. But with leverage, I can turn that $10,000 into $50,000 in the span of a week. Right? So when I make, a certain amount of Bitcoins, I then transfer those Bitcoins from exchange to cold storage. I have a Trezor. I just ordered a new one, a different one. I'm going to try it out because it's Bluetooth capable. So we'll see it. I'm going to see how it works. But yeah. And then if I need money to pay my bills, which rarely ever happens because I trade FOREX and stocks as well. And all four of those accounts are cash accounts. So if I take a trade on USD JPY, I'm paid in USD, right? So yeah, But if I want to cash out Bitcoin, I just send it to Coinbase, pay their obscene fees, and cash it out. I do that with Tether and USDC, not Bitcoin. I want to keep all my Bitcoin. I keep it as long as I can. If Bitcoin keeps going to zero, I'll keep shorting it, and eventually I'll sell it all. I don't know what I'm going to do with it. I just think it's going to go much higher in the future. I do. I really do. I think it's going to be worth $150,000, $200,000 in 10 or 15 years. I could see that happening easily. The next big bull market we're going to get, think about this. We're in a bear market now. Bear markets can last anywhere from 1 to 5 years. And then after that bear market, you get 10 to 15 years of bull market. And that's how the cycle has been forever and probably will continue to go. So yeah, we'll short the stuff in the bear market, make money. And then when it's time for the bull market to come back, we'll start getting long everything. There's already some stocks I'm looking at buying right now because we've had 3 prints of lower inflation. I would have liked to seen it lower. Like at this time, I would like to be down under 7.8 or 7.5, but we're not. So I'm not going balls deep into buying stocks yet, but I will go balls deep. We get some lower inflation numbers. When you short, okay, I read that. S&P new high of day. I assumed that, Aaron, because Bitcoin made a new high of day. I didn't know, but I assumed it. Would I take a long though? No. All right, so here's another little lesson. These blue boxes are your daily ranges. All right? They're your daily ranges. So each one of these boxes is your daily range from open or high, low to close, right? This is your open, this is your close, this is your high, this is your low. I cannot buy something that is trading at the high of day. I just can't. I cannot get long something that is trading high of day. Can I buy the open, a retest of the open, expecting a higher high on the day? Yeah, I can, but I can't buy the high. Down here is where you should have been a buyer. At the London session, trap. But we didn't know that then, right? And also, we were testing the open of the week, and the week was bearish. So we were looking for the weekly range to continue to expand lower, thus bringing today's range back down towards the lows. That's not what happened. Will it happen? It could. You could see sellers step up, or you could see the market can find sellers here and go lower. That's why I can't buy the high. Just like I can't sell the low. Like last night when this big ugly candle came in, I wasn't on my laptop selling this, trying to short this. And I'm glad I didn't, because look, right? Breakout traders, in my opinion, it's just not the right way. I'm not going to go as far as say they're not profitable, but it's not the right way. Price oscillates back and forth. It doesn't go up or down only. Now, if it went up or down only, I would sell the lows because I know it's going lower. It doesn't do that. It oscillates back and forth, up and down, up, down, up, down, up, down, up, down, up, down, up, down. So I can't sell the lows. I can't buy the highs. I don't like to short the highs either, right? I don't. I typically don't. But I do a lot of times nail the high tick. This was the whole day. That's why we got short during the New York session. It didn't go anywhere. Well, there was other things going on too that day, but so it does look like I sold the high of day, but it's not the same. I can't explain it. Sometimes I get stopped out. That's trading. That's where risk management comes into play. But I mean, Bitcoin moves from down here to there is $500, $600. You know what I'm saying? On a half a Bitcoin, that's $250. How much money do you need to make a day to be successful at trading? Because with Bitget, I've turned $200 accounts into $500. That's a 200x, over a 200x on the account size. Would I do that with 10 grand? Hell no. Right? Because I was willing to lose that $200. But like with leverage, you can use, if I needed to generate $100 a day with this, I could do it with a $500 account. I could generate almost $100 a day, every day, with a $500 account. You don't need a lot of money to make a lot of money with leverage. But you also need to know when you're wrong. Like when you lose a trade, you don't go right back in and try to get your money back instantly because you think it's going to do something. You take your trades at your high probable areas. If you get stopped out, you're wrong that day. You stop, you wait till the next day, because the next day might have a great setup, right? So you don't, in my opinion, you can make just as much money trading Bitcoin as you can altcoins, especially in a bear market. I'm not trying to short an asset that's already lost 99% of its value. Yeah, they should be watching in HD. It looks like it's recording in 720p. If I try to play it back, I'll be getting it in 720, but my internet's shit. I ain't gonna, everybody knows it. Yeah, I usually do say the price levels, John. Yeah, I mean, risk management, you got to have it, guys. You got to have it. It's going to take you a while to understand the concepts and principles that I'm teaching. They are simplified, right? I take out, there's so much stuff that just goes into the strategy itself, but you really could just simplify it by just looking at daily resistance and daily supports and only taking trades when you're at those two levels. And it's so simple because daily supports is bearish closes and daily resistance is bullish closes, right? Your close is your resistance on a bullish day. Your close on a bearish day is your support. Will you make every trade you take? No. If you would have got long here on this day, depending on, because this range goes all the way up, but they closed under it. So, yeah, no, you wouldn't have. But this candle made everybody look for longs on this day because it was a breakout candle, right? It broke out above resistance. There's your last resistance. Nothing closed over it. Nothing closed over it. Oh, we closed over it. All right, let's look for longs. I mean, we could have made money in it if we got long down here and took profits as it moved up and still been on the wrong side of the market. Like that happens to me a lot with this strategy. A lot of times I will take a trade, make money because I was on the right direction for a brief second, take profits, then move my stop to break even, then my stop gets stopped out because I was literally on the wrong side of the market. But the trade still worked, right? That's all I'm trying to do is generate revenue daily, if possible. Some days I don't. Some days I lose revenue, like today, right? But I didn't blow my account either. I know that stuff gets views. People do that shit on YouTube. I'm going long with $10,000 at 125x leverage. Oh shit, I owe the broker $75K in 2 seconds. But hey, I got 4,000 views. YouTube doesn't pay what people think it does. Oh my gosh, it does not. I would say if you're generating 150, 200,000 views a day, you're probably getting paid. But have you found a way to algo your strategy? I don't know anything about code. I don't write code, but yeah, it's very easy. Very easy to code. I'm sure if you know how to code, you could code this strategy. I guarantee it. There's kind of two different strategies I deploy, right? I deploy the liquidation break strategy, and I also deploy a retest of a level, like retesting old supports and resistances and stuff, right? The retest of support and resistances, those trades tend to work better in a trending environment. So like you're letting an asset, move up for a few days, then you wait for a few days of a pullback, and then you look for a very good level, like an old resistance or a support level, then you look for your entries, right? You can code that. Yes, you can. wait for the next day, the last daily high to get liquidated, then you go short. Like, you could code it like there. What happened after this day liquidated that wick, right? What happened? Had you gone short at that line through your stop above that? Did you make money? You damn right you did, for about 8 days in a row. That doesn't always happen though. But look here. What happened here? When you went down here and took out that low, if you bought it, did you make money? Hell yeah, you did. Where was your stop? Right below the low. You're still making money. Well, you're not making money anymore. Once you got to this point here, if you didn't take profits, you're stagnant. It's sideways. But from this point to anywhere in here, you made money. That's what happened to this trade over here. That's why I'm gone. I'm out of it. I trailed my stop when I took this short right there. That happened on CPI day. I shorted the high of day, ended up being almost a top tick. I don't know if that was a live stream or not. Yeah, it was on Tuesday. Of course it was. Those kind of trades, they work out great, but when the market starts going sideways, I've already taken profits off of the trade once, twice. So when it's doing this, it's not making money. It's just there's a cost. You know what I'm saying? There's a cost to sitting in this sideways junk. You're not making money. You're losing money. If it's just going sideways. Because the funding rates, if you're short, you know what I'm saying? The funding rates will screw you sometimes. It doesn't take a lot of your money, but overall, just sitting in a sideways market's not a way to generate income. So I look to enter and then exit with the majority of the profits, and I always leave a tiny piece on just in case it wants to continue. Just in case. I don't know that it will, but just in case it does. Think about shorting the fresh 2022 yearly high. That didn't happen during a live stream, but happened in a Discord. Shorted that. Took profits that same day. This bearish day right there. We knew we were looking to short this because it was a fresh yearly high. Took out this stuff. Took out the yearly open, and that was the yearly high. That candle made the fresh yearly high. You could have shorted as soon as you made a fresh yearly high. You'd have made so much money. I don't leave it on because you don't see continuation that often, but sometimes you do. Shorted in this blue candle here. Took profits on the move lower. And then days later, just every day I woke up, it seemed like the P&L had grown and grown and grown and grown and grown and grown. This is when I exited that trade because that was my bear market target at the time, 26K. And nobody believed me that we'd see 26K. So it's hard to short all this stuff down in here, especially at the lows, but the market's bearish. Until it becomes bullish again, I'll be shorting it. If you just think about, every single one of these days also, there's an opportunity in every single one of these candles. But I'm not looking to make millions of dollars in one day. I'm looking to make 2 to R's or 3 R's, 2 to 1. If I'm risking 1%, I want to make 2%. And you can do that every single day. There's enough movement inside of this asset to just make or lose 1 or 2% every day. Jesse Olson has been spot on his price targets for certain assets. He has Tesla going to sub 100. You know what, John? Jesse came from CTM, right? Jesse wasn't a trader when he bought Jordan's course. Jesse has only been looking at price charts for 2 years. It used to be in his Twitter bio back when he had 4 or 10 followers. I was one of them because I remember when he signed up. I've been trading much longer than Jesse Olsen, and I'd lay money on it, and I'll make a public comment right now. If Jesse Olsen wants to live stream with me every single day, we'll see who makes more money. Yeah, I'm sure he gets some of his price predictions right. Everybody said I was was stupid when I was saying that the top of the market was in back in November. And everybody told me that 26K was, there's no way. And we're trading at 19.3 right now. I don't know that it's going to go lower. Jesse doesn't know where price is going to go. He makes predictions. Sometimes they're right. Sometimes they're wrong. People just don't remember the times when he's wrong. All right. He's a whatchamacallit. He's been trading for 2 years. Not even trading for 2 years. He's been looking at charts for 2 years. Let him start a live stream. Let him start taking trades. Then you'll see what he's really about. I do this Tuesdays and Thursdays. You can go back and watch my videos for years. And you'll see, or 2 years I've been doing videos. You'll see if I'm accurate or not. I don't have a problem with him, but there's just something went wrong inside that whole group. It was a fantastic group to be a part of. Something went wrong. But I guess Jesse left. Everybody left. Now they're all doing their own things. But yeah, I mean, follow him. Listen to him. Take his advice. I bet he's got not financial advice in his freaking bio. You can follow my advice. I don't say not financial advice. I used to in the beginning, but not anymore. I'm taking trades. I give you setups, entries, stop loss, take profits. You want to take them? Take them. Most of them work. Some of them don't. And that's all it is. There's the Olsen. Yeah, okay, read that. Amazing, TA. Thank you, Shelby. Have you found a way to algo? Oh, read that. I just bounce around. I have already learned so much since I've come in and started watching. You will. You'll learn a lot. Especially, I mean, if you want to be a trader, if you want to be an investor, it's not the channel for you. I am a day trader. I do invest. I do hold long stocks, right? I'm still holding Tesla. I have not sold. I'm not going to sell Tesla because I caught the splits. You know what I'm saying? Both of them. I'm not getting rid of my Tesla shares. And I'm in way lower. Way lower. I'll never sell those shares. Those shares will be retirement in the future, more than likely, if Tesla keeps going on the road they've been on. And I do believe they will. I mean, look at what he's the modern day Iron Man. Amazon made a show about him. It's a good show. I watched it. Modern day Iron, or the realistic Iron Man. I can't remember the title, but Elon Musk is Iron Man. He's awesome. I mean, he's done some cool shit in his life. Been accumulating the whole way down on Bitcoin with you. Will ride as well. I don't suggest doubling down on moves lower, but I do believe Bitcoin will find a bottom. When, where, I don't know. If it does make another leg down, which it looks like it's trying to do, then you'll probably see another 30-40% drop. I got 13.8 as where I'm looking for it to, like, if it does break down, for it to potentially go. And I've been talking about this level since July of 2021. So I started talking about this level when we were here. All right. Now people are talking about it now that we're here. I have a live stream that I titled 13.863. That's the title of the live stream in July. And basically all of the whole live stream was to say this: if price gets there, I will be a buyer. For sure. For sure. Bitcoin has never done what it's doing now, which is broke down below an old all-time high in the 4-year cycle model. Does that mean the 4-year cycle model is broken? No. But we'll know in the next 4 years if it's broken or not. We'll know within 2 years after the next halving if it's broken or not. A lot of people say it's broken, but I don't believe it is, because November, December has been Bitcoin's tops throughout all 4 cycles. So, I mean, that's not broken. And the bear markets last about the same amount of time. This one, when did it, I mean, from where you found the bottom to where you broke out above the all-time high, those are getting longer. So lengthening cycles, yeah, for sure. The more people jump into an asset, the harder it's going to be to get it more expensive as well. I read something the other day that said over 90-something% of all Bitcoins are already owned. If that's true, then this price chart's going to continue to do what it's been doing, and that's go up, right? Because its supply is finite. It is not infinite. Yes, it can be broken in half and then broken in half and then broken in half, but it's not infinite. It will run out. I don't know how it works. I'm not a tech guy. I'm a trader. I like tech, but I don't know how it works. I couldn't build it myself. I'm not a dev, right? I'm none of that. This channel is specifically built for one purpose, and it's to teach people what they should be looking at if they want to be an active intraday trader. That is it. I'm an investor on this, and I do own Tesla. I own other stocks. I'm going to buy more, right? These are the stocks that I'm looking at. I just started building this watch list yesterday. Stocks that I am buying. Roku. This thing got beat up. I think it's going to start finding some demand for it. Now, here's the thing about Roku. It's an add-on device. Like, what is it that I own? I own something different. What I own is from Amazon, a Fire Stick, right? Most of that technology is just directly built into TVs now. So in order for Roku to reach heights like this again, I think they're going to have to invest in other ideas, right? They're going to have to look for new ways to monetize their products. And if they can do that, Roku's a fantastic buy at this price. But if that's all Roku's got, if they're just going to be a one-trick pony, I will lose money on that investment. I lost money on the space investment. I thought for sure space, Virgin Galactic, was going to stop around 1056. You can see that I am down heavy on that investment. Down 56% on that investment. I will buy it again down here. I just don't think that rich people taking spaceship rides is good for the economy right now. But like Roku, if they can figure out a way to monetize other things in their company, like how Tesla did. Tesla was just a car company. Now they have all this other stuff. That's what companies have to do. They have to keep inventing. They have to keep moving forward. Keep finding out ways to make money, or they go to zero. Amazon started as a book place, a place to get books. Now look at them. Now they are the owners of so many technologies, it's not even funny. O'Reilly, this stock only goes up. I mean, it's self-explanatory. I have never seen a better stock chart than that. And they have only, the last time they did a split was in 2005. I mean, look at their earnings look at how many earnings they beat compared to earnings they miss. It's a bear market, and they're at all-time highs, almost all-time highs. So I'm not going to invest in it up here. I would like for it to get a nice dip. Advanced Auto Parts, they're the ones that I'm going to be looking to buy soon because they have gotten a nice dip. They're down 26%. They're going to be here forever. As long as cars are the main mode of transportation in the United States of America, Advanced Auto Parts is going to make money. NVIDIA, that's a chip company. Computers are just getting better and better and better. They're going to continue to get better and better. Intel, chip company, they got beat up really badly because they're tech. So I'll keep working on this, and once I got all the ones I plan on buying, I'll share it publicly. That doesn't mean I'm going to make money on any of those investments, but we'll see what happens. Looks like my internet is dropping. I'm not losing any frames, so I don't know what's going on. Here, let me load up a new one. A new one will load up quicker than this one. Maybe. That's a daily chart. That can't be right. Well, anyways. Yeah. Jordan blocked me a while ago. He will if you dog on him. I will only do it if you like. I block mostly bots. I don't block people for saying stuff. Like the disagreement that we had on Twitter the other day, it's not me being a bitch. It isn't. I'm not that. That's not me. People that know me know me. You can cut on me all you want. I know I'm wrong sometimes. I'm not. I'm very humble. One of the most humble people you ever meet. It's the complete and utter disrespect that I will not put up with. When you say things like, you don't know what a ball is, that will annoy me because I do have a pretty good IQ, right? I am intelligent, far more intelligent than I sound. I can write better than I can talk, as most people. I just don't like it when people just flat out insult my intelligence to prove their point. Because to me, there's a word for that, right? There's definitely a word for that. When you try to knock someone down to prove your point, I don't like it. That's what got me upset. And he knows it. He knows it. Constantly does it. Not just once. I just had enough. And that's that. It used to be a fantastic community, though. It still is. I mean, the people make the community, not the leader. It's the people. My community is fantastic. Right? It's the people. For sure. But yeah, you and Jesse have been the most accurate. Well, I mean, he's got skills as far as technical analysis, but it's skills that anybody can learn, John. You can learn to be more of a better predictor than he. You know what I'm saying? It's like technical analysis is like anything else. You can learn it. You do not have to pay somebody to learn it. Like my Discord it's hidden behind a paywall because answering questions it takes up time, right? So I set it up as a donation. If you want to be in the Discord, you can donate. I will let you in. If you don't, that's fine. You don't have to because you will learn whatever I have to offer just by watching the free videos. But in the Discord, you have 24/7 access to ask questions and stuff. So, I mean, you don't have to pay me to learn the strategy. And you shouldn't have to pay anybody to learn how to trade. That info is freely given. I understand why people do it. There's a market for it. And therefore, yeah, why not? Right? If I wanted to, I could charge $1,000 for trading courses and this and that, set one up and do it. But I don't want to market my information. I do just fine right now. I don't need to do that. Other people, that's what they're making money, not trading. So you're buying info that's not even certified. It's not even proven. So if you're going to buy people's courses, make sure they have at least third-party verified brokerage statements that proves that they're even profitable. I don't sell a course, therefore I'm not giving you my brokerage statements. If you want to pay me $1,000 for my brokerage statements, I'll send them right to you. Give me your email address. I'll give them to you. I got 5 brokers. Give me $5,000. I'll send you all 5 of them. We'll go back 4 years if you want. Yeah. Clients, wait, NXS. Okay, you're talking to someone else. Got to run. Yeah, I'm running too. I'm just ranting at this point. Narwhal Tacos has been following me for a while, for sure. Yeah. And I appreciate you for being here, my friend. I really do. Every single one of you that are here all the time, I appreciate that. I wouldn't be here if it weren't for you. Right? YouTube doesn't pay very much at all unless you're getting a ton of views. I'm not shopping for views. I'm trying to help people. And if people keep coming, I'll keep doing it. When people stop coming, I'll stop doing it. But it's good. It's good information. Well, in that case, like I can understand like deleting a tweet that was just arguing and stuff because he has a what do you call it? A public persona to maintain, right? You can't have people going back on your timeline and reading negative stuff about you. But as far as blocking someone for asking a simple question like that, I don't know what's going on there. Maybe he just thought you were trolling. As far as I know, I don't know him in real life, right? As far as I know, he's not a bad person. People sent me a bunch of stuff a long time ago, and I looked into it, and it is what it is. I don't think he's a scammer or anything like that. I know he's quick to block people if you disagree with him or something. People disagree with me. I don't block them. I block them if they start getting like crazy, taking it to a whole new level. Then you get blocked. Yeah, there's NVIDIA. It finally loaded up. It's down a lot. It's a chip company, so they're going to go back up. As soon as inflation starts to trend back to the downside, then a lot of these tech stocks, they're going to go right back up because tech is a sector that people like to invest in. High risk, high reward. And you can get a lot of them cheap right now. But we'll finish off with this. This is what most investors are waiting on. Right here. This number, 820. What investors want to see is this number moving lower, right? Consistently, month over month over month. A couple little spikes are okay as long as it's making lower highs and lower lows. Once that becomes a trend, this is their target. I don't think they'll ever get it. I don't think they'll ever be able to get back down to here. That's just my opinion, though. But I don't think they need to get back down here in order to make stocks start to be bid again. We could be in a long 10-year period where there is no growth, where everything just chops around in a big, massive range. And if that's the case, we're going to be buying the low end of the ranges, right? Because we do know eventually it will break out. Bull markets will come back. It will come back. And when it does, people are not going to believe that it's here yet until we get back to all-time highs. That's the wrong mindset. You're supposed to buy stuff at a good value. That's it. If you want to have a very good stock portfolio, buy a lot of the companies that you know are going to be around for a while and buy them cheaper. Like this is a monthly chart. this is the biggest pullback Amazon has ever seen. Well, no, there was once over here. Yeah, there was one time over here where it lost almost all of its value. I take that back. Yeah, that was a 94% dip. But I mean, since then, how many dips have you had that's been, 46%? So go back in Amazon's history, find every 46% dip and see what happened, later. There's a 35% dip. You get my point, right? You get my point. The bears, the perma bears will always say that the world is falling. The sky is falling. The world is crashing. It's better to be a perma bull than anything. Look at this as a buying opportunity, not the end of the world. It is a buying opportunity. And since the split, you can afford Amazon. It's $117 per share. You don't need to buy a bunch of them. You buy small amounts of this, small amounts of that, small amounts of this, small amounts of that. And in 15, 20 years, you'll be able to retire. Because this is going to be one of the best buying opportunities that's going to be talked about for the next 20 to 30 years. This is a life-changing event, what we got going on right here. We shouldn't be upset that there's a bear market. We should be happy. We should all be happy because it now gives us normal people a chance to invest in some of our favorite companies much cheaper instead of just buying them at the highs. There's your March 20 pandemic on Google. Now this has split as well. This was trading at $1,000 when this happened, right? But look at the percent return from just the March 2020 pandemic lows, a 30% drop ended up netting people 200% in returns. Yeah, this will do the same thing later. 15 or 20 years from now, this thing will be up here, right? That's all I'm saying. It would be nice to nail the bottom of the bear, and we're going to get close. All right, we'll go ahead and wrap it up. We've been going almost 2 hours, exactly 2 hours and one more minute. Next Tesla support before you go, please. Yeah, let me go do that real quick, and then we'll wrap it up. I get on these rants. I should call it Trade Talk Rants. That should be the name of the channel because I do more of that than anything at the end of it. You're at support. You're at monthly support now. Just give my internet a second. I should have left the other one up. There we go. You got another smaller 2-week support down here at 193.41. Now, like I said, I don't know that this will hold. And in fact, if the bear market continues, then a lot of these things are going to come off some more. But that's support until you close below it. There's 1 day left on this close. There's the close on the 2-week support. The next 2-week support is here. So I think you could be a buyer here. I'm not saying buy it with leverage or anything like that. Just if you want to own some Tesla shares. Yeah. I mean, just back up to highs is going to be 100%. Close to 100%, just back up to highs. I don't know that it is going to get back up there, but eventually a bull market will start, and it will, more than likely. So I think you can be a buyer around these two areas. The next big area to look would be 147.37, right? Just because it's old resistance. But just look for your higher time frame levels higher than daily. If you're looking for an investment, use weekly, 2-week, monthly levels and be a buyer at them because it's going to be harder to break down below them. And you've already tested your monthly support. It's been tested though 1, 2, 3, 4 times. This is the 5th time. So if it breaks down, buy more at 129.35. Oh my God. If Tesla was to break down below 50%, like 70%, I would just be a buyer. Yeah, I mean, you're right at monthly support is literally right at 50% off. That's half off. That's not bad. Not bad for a stock as awesome as Tesla. So I would start picking up a few shares here and there. And then ultimate support, like bottom bear market, 129.35. All right. Netflix is another one, guys. It's going to be here for a while. Netflix invented this whole streaming thing that everybody now does. They took a brutal beating. At one point, you could have got Netflix almost 80% off. So where is it now? Like, is it now? Is it a good time to be a buyer? I would wait on support because that's just how I do things. But remember the space, the space investment. I'm down over 50% on that. So keep that in mind. All right. But I'm going to pick up some Netflix. I'm going to pick up Netflix probably as soon as I close this stream. A couple shares of it. Because I think it's going to go back to this stock hasn't split either. I don't think it needs to, but it might. The splits is what you like. Even though it doesn't help you make money when it happens, it will ultimately longer down the road because you'll own double the amount of, well, however big the split is, that's how many shares you'll own. And then if it gets back to all-time highs and higher, that's how so many people's retired in this country. Not because they had great jobs, just because they owned shares of their company and had a couple splits. And just sat in it. Nvidia, I like Nvidia. I like Google. I like Amazon. I like Apple. I like Tesla. I don't see anything else on there that I love. Roku, I like if they can get their stuff together. Salesforce, I don't know. They got beat up too. There's a few on here I like. So if we get close to the bear market lows, which we could if inflation starts trending lower, everybody's waiting on the Fed pivot. Let me just say that. Everybody's waiting on the Fed to pivot. And some people are going to assume that the Fed pivot just means they're not hiking 75 basis points anymore. And that could be a hint, right? If the next FOMC meeting happens and the Fed says we're only going to raise 50 basis points instead of 75 basis points, that will be looked at as bullish. Will that mean that the bear market lows are in? No, but it will be bullish, right? When the Fed becomes less hawkish, they are not talking about waiting for the Fed to become dovish. If you wait for the Fed to become dovish, where they're lowering interest rates, you're going to be waiting too long. So when people say pivot, that's what they mean. They just mean when the Fed slows at the rate at which they hike rates. Once they slow down, they're going to look at that as bullish. What I tell you, I think you should look at is inflation. I don't think you should even give a shit about FOMC. I think you should watch CPI. As soon as we have a trending lower inflation number and it's trending lower, stocks will start trending higher. It has to happen that way. People will start putting their money back into risk. And, all of your values plays that we're growing are going to start to lose. So you don't want to be a buyer in value, which a lot of value's already been getting killed, but that could just be simply because the companies aren't doing good. But there was a lot of them on here that I had as value plays. This was what you should have been buying when the bear market started. My internet's done, so we're going to wrap it up. I can't even freaking switch from chart to chart. All right, y'all have a fantastic day. If you have a question that I missed, just drop it down in the comment section. As always, I will get to it. I read them all, every single one, even the bots. So be my guest, leave the question. I will answer you. Until next time, which will be Tuesday, I'll see you guys then. Make sure you all trade safe. Make sure you trade smart. And as always, happy trading, everybody.